Good morning. Thanks for tuning in. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akil. Here are the headlines. It's a subdued start to the expiry. The Nifty trades around 11,750. Banking and pharma stocks lead the gains. Grasim and ICICI Prudential are seeing a surge in open interest as traders take fresh positions in their respective futures. Bharti Infratel is the top loser on the Nifty after it missed estimates in the quarter gone by. And Maruti is also among the top losers on the Nifty ahead of its earnings. The street is anticipating a weak quarter.
Okay, those are the top headlines for you at this hour. But remember, we're getting it's the earnings season and earnings are coming thick and fast. We had Indiabulls Housing Finance coming out with its numbers where we saw its bottom line drop in the fourth quarter as funding pressure hurt the home finance segment of the company. The pressure, will this pressure actually ease going forward or not? We're joined by Shefali Malik, who spoke to the company's Deputy Managing Director, Ashwini Kumar Hooda, and started off by asking him about the drop in disbursements. Listen in.
The company has raised more than 50,000 crore in last 6 months, which is by far the highest for the proportion of balance sheet in the non-bank space. So we are sitting on a very comfortable liquidity of more than 31,000 crore. A typical requirement at our end is 20,000 crore. So there is 11,000 crore excess cash sitting on balance sheet, which will be used for growth in this year. So we are looking at resuming our normal disbursement, and as we speak we are disbursing at our normal pace of around 10,000 crore a quarter. So this quarter onwards we should see a normal disbursement. We have also invested in elongating the maturity of our liabilities. So we paid down commercial paper, which used to be 12% 6 months back, has reduced to 4%. So now ALM is one of the best in the industry, and we have excess cash which will help us grow very well in the coming this financial year.
Sir, your spreads were marginally lower on a sequential basis. So help us with an outlook going forward for FY20. What kind of spreads are you targeting?
So historically for last 10 years, company has operated in 300 to 325 basis point. Last quarter was 3.46%. This quarter it is 3.42%. So we are on the higher side of our guided range, slightly higher than that. We believe that we should be able to operate around 3.25% in this given year as well.
So how much were the sell down of loans in this quarter, and also this has been one of the focus areas for you and for a couple of other NBFCs as well, especially in last couple of months. But do we expect some sort of pricing pressure to come in here as well, as it may become more of a buyer's market?
So Indiabulls Housing has been selling pool of home loans and loan against property for last 8-9 years. We've sold almost 55,000 crore in this period. So there is a huge market which understands the quality of loans we underwrite, and we have published the details of these pools where the delinquencies are in single digit in basis points, so 4 to 5 basis point. So such a good quality portfolio, if banks were to originate on their own, there is a lot of origination costs. So it is a win-win model where banks have access to low-cost deposit and they buy these pools of loans, whereas we have last-mile connectivity and we are able to originate these retail loans at a very low cost. So I don't see there to be too much supply in the market which will choke and put pressure on pricing. As we speak, there is enough and more demand. Last year we sold almost 22,000 crore of pool. 6,000 crore were sold in the last quarter. Our run rate, I believe, going forward will be more like 3,000-4,000 crore. A slightly higher number was sold down to pare down the CP and elongate the ALM maturity. So that has already been achieved, and you should see a normal supply of around 3,000-4,000 crore, which we believe market should absorb very easily.
Sir, there was some amount of pickup in your NPAs on a sequential basis. So where is this pressure coming in from? And also, if you could tell us how the developer loan book is doing and how is the LAP portfolio currently? Any amount of stress visible there?
So there is no stress on the LAP book. Historically, that book has held up and it continues to hold up very well. Developers, there is a little bit pressure on some cash flow because there was a last quarter imminent reduction of GST applicable from April 1st. So some of the cash flows were delayed last quarter. But the slippage, if you see, last year our NPAs were around 950 crore and this year it is 1,080 crore. So there is only 130 crore of slippages in the entire year, and we made good provisions. So I don't see asset quality to be of any pressure. Our net NPAs continue to be one of the lowest in the entire industry at 0.69%. So less than 0.7% NPAs. We continue to have a very healthy asset book.
Sir, just day before yesterday, there was a report by Credit Suisse which said that the benefit of various measures taken by RBI to infuse liquidity into the system hasn't really flown to NBFCs, even though you say that you have one of the best ALM positions. But the report says that NBFCs have about 1.3 lakh crore rupees of repayments coming up in the first quarter of this fiscal year. So what is your take on that? What could be the impact of the same on the industry and on you specifically?
So, see, as a wholesale funded non-bank company, we believe that keeping a large liquidity pool is the best insurance against any tightness in liquidity or money markets. So we are having 31,000 crore on balance sheet, which can repay all our liability for this entire financial year, the 4 quarters, with a margin of 30%. So we have 1.3x of our liability due for this entire year. So we are very comfortable, and this does not assume any customer inflow or a single rupee of further borrowing. So it's an extreme liquidity comfort that we put on our balance sheet. So we don't see us facing any issues on the liquidity. In fact, we have around 10,000-11,000 crore of excess cash on balance sheet now, which we believe will be put to growth. And for us, while even if industry is tight, it should be a growth year for us.
Sir, a word about merger with Lakshmi Vilas Bank. Any sort of dialogue that you're having with the Reserve Bank of India? When can we expect to hear something about the same, an update about when can we expect the regulatory approvals basically?
So the regulatory process is underway. The merger process will take 6-9 months. RBI approval also takes time. There is no definite timeline, but we expect it to be a 3-4 month process. But everything is on track. The merger qualification from a group perspective is there. We tick all the boxes. We are hugely liquid, so that process, I believe, will take time, but we are very positive that it will go through.
So just one last question. There was a complaint by CREDAI to Finance Ministry that Indiabulls has increased lending rates to existing developers from about 14% to 20%. So what's your take on that?
So clearly, there are different projects with different risk parameters, and some have been impacted by price increase. On average, to the developer book, we've increased the rate by 150 basis point, which is in line with the industry, and that is because our cost of funds have gone up. And it is a pass-through. We are a pure pass-through housing finance company. And we understand developers who do not want to pay higher prices, they might want to refinance these loans. So we have waived prepayment charges or prepayment charges on these loans and allowed a lot of developers to refinance. So we are helping these developers on supporting their construction activity. We have been fully behind these projects, and wherever we have commitments to disburse on these under construction, barring the month of October and part November, we have been disbursing regularly and supporting all these projects. So our developers are very happy with us, and we don't see any implication for this complaint.
Well, that's the management of Indiabulls Housing Finance talking to us about the quarter gone by, as well as addressing any concerns whatsoever, if there was any, in terms of stress when it comes to the portfolio. But let's shift back focus to the futures and options space, and I'm going to get in our experts for the day. But before we do that, here's a reminder: if you have any queries regarding futures and options, you can call us on 022-4540-4141, or of course, write to us on Twitter, Facebook, and YouTube with the AskBQ hashtag. Let's get in our experts for the day. We have Ashish Chaturmohta of Sanctum Wealth and Aditya Agarwal of Way to Wealth Securities joining us on the show. Good morning to both of you, and thanks for joining in. Ashish, let me start with you. Very interestingly poised indices right now, and for a change, the VIX is falling for 2 straight days. How would you position yourselves?
Good morning, Agam. So, we have been maintaining this view that despite the rise in VIX, which we discussed last time also, because higher VIX is a result of, election event ahead, and we have seen normally 7 to 10% kind of volatility at an index level post-election. So, generally, any option writer, whether it's a call writer or a put writer, will definitely ask for a higher premium that is getting reflected into a higher VIX, which is trading at a 4-year high. But despite that, we were continuously sustaining above 11,700, 11,600 kind of zone for last couple of few weeks, and there was a small correction from all-time high zone from 11,800 to 11,560, but at that time also we didn't broke 11,500 levels. And now going forward, what we have witnessed in yesterday's trading session is a heavy put writings being visible at 11,600 and 11,700 zone, clearly defining that this 11,600 to 700 is going to be a very, very strong support zone for the market. We have observed these call writers who were very active at 11,700 calls. They have liquidated the positions and shifting it towards 12,000 zone. So clearly the base is created around 11,600, 650 mark, and I think on upside there is a strong potential for Nifty to cross or test at least 12,000 kind of zone in a very short term time frame. Sure. Now if you look at most of the index heavyweight names like Reliance, for that matter UPL, or maybe private sector banks, or FMCG names like ITC, HUL, they are contributing to this rally, and if these names sustain or continue this momentum, then I think that's going to definitely support the broader indices. Yeah, although I would say this is a narrow rally, because again the rally is shifted towards large cap names, but definitely these large caps, the kind of weightage they have in the index, they can definitely take index towards 12,000 to 12,200 zone.
Yep, clearly, as Ashish mentioned yesterday, if you were watching the options data and last hour of trade, it gave you a clear indication as to how the entire direction turned. And today also we're seeing put trading around the levels of 11,700. That's added nearly 21 lakh shares, and 11,750 strike, by the way, is also very active on the put side. That's added nearly 10 to 11 lakh shares. Aditya, considering today is the expiry day and put trading continues around that mark of 11,700, and at the money strike 11,750 is also seeing a lot of open interest addition on the put side. Where do you see the expiry taking place, and is there any trade that you would recommend on the expiry day on Nifty or on Bank Nifty?
Morning. Well, if we see Nifty, then overall trend for market is bullish, and for short to medium term perspective, we are advising our clients to use any kind of dips toward 11,600, 11,550 to initiate long positions. On higher side, 12,000, 12,200 are the target which you're expecting that Nifty can text in next series. As far as today's expiry is concerned, I am expecting that Nifty today will be a very dull day. We have already seen a big move yesterday. So today I'm not expecting a big move from these levels at 11,800. Lot of call writing is there, so that will act as a very strong resistance zone. As similarly 11,700, we are seeing some put writing, and also at 11,750 levels. So more or less markets will be range bound today in the range of 11,730 to 11,780 levels. So this is a 40-50 points broad range today in which I'm expecting Nifty to trade. So from these levels, there is no clear trade for Nifty for today. Yes, if Nifty corrects by 20 points, if Nifty comes in the zone of 11,730, 725 levels, around those levels one can buy for intraday with target of 11,770, 11,780 levels. But at current levels, there is no clear trend, so I will not initiate any kind of long or short today, short trade, at least for today's trading session.
So both our experts don't really have a specific call on the indices, even though they remain constructive. So let's talk about stocks then. Ashish, let's start with you. What do you have on your list today?
Yeah, so I think Pharma basket is showing a good traction. We have a call on Aurobindo Pharma, which has seen almost 13% open interest addition in today's trading session. Very strong price volume breakout, which we are witnessing. I think stock is headed for a much higher level from current levels. Although we recommended the stock somewhere around 795, but we have already seen a good 10 rupee jump. So I think I would like to revise my stop loss. I would like to keep it at around 792, and on upside I will revise my targets also from 825 to 845. So I think clearly another 40-45 rupees uptake from current levels is what one can expect in Aurobindo Pharma. Second bet would be on UPL, again a Nifty 50 name which is seeing a very strong OI build up in last couple of few trading sessions, continuously consolidating near its all-time high zone for last 4 weeks, and has seen rollovers more than 70% in the May series. So I think clearly UPL is one stock where one can expect a decent up move. 945 would be my trading stop loss. 980 is a short-term target one can expect in UPL. And my third bit would be again a specialty chemical name is SRF, again trading at all-time high, but before hitting its all-time high it consolidated for 5-6 weeks, right. And today we have witnessed almost 6% kind of OI jump. So clearly at all-time high we are witnessing a lot of long accumulation taking place, so which gives us a sense that another leg of rally can take stock towards 2580, 2600 zone, and for that 2500 should be kept as an trading stop loss for going long in SRF.
Okay.
Aditya, what about you? Your stock-specific trading ideas for the day?
Well, my first call will be buy in Pidilite. If we see Pidilite after good rally, stocks saw some correction in last 3-4 trading sessions from 1300 levels, it corrected towards 1200. Now, if we see long-term chart, then 1190, 1200 is a very strong, it was a very strong resistance, and now it will act as a very strong support zone for the counter. And this kind of correction which the stock has seen last couple of days, it can be used as a buying opportunity. It can be bought at current levels with target of 1290, 1320. On lower side, 1202 will be my stop loss. Second buy will be in Hexaware. If we see Hexaware also, yesterday we saw some good correction after results, but stock is trading in a positive territory overall, and it is still looking positive. So again, at current levels, I would like to buy Hexaware for next series with target of 365, 370, and target my stop loss will be 327. One will be a sell call in L&T Finance. If we see L&T Finance, it has given a breakdown below its crucial support zone of 143, 144 levels. And we are seeing some short position getting built up in this counter, and also we are seeing short rollovers. So overall stock structure looks weak. 137.50 is an immediate support. So I would recommend to go short below that with target of 128, and my stop loss will be 143.
Okay. So a very long list of ideas coming in from our experts, and I'm sure we have a bunch of them too. So let me start off with ICICI Prudential, because we're seeing an up move. This is of course after its earnings. It seems the streets liked what they've seen in ICICI Prudential's and quarterly earnings, and it's currently at around 370. I'm also looking at this chart. We have addressed this in the weeks gone by. What's also interesting is its 50 daily moving average is now making the dash for the 200 daily moving average. And should we see that crossover? Well, conventionally, investors and traders would take that as a positive sign. For now, of course, it hasn't yet, but it is very much in fray or in line to do that. It's currently at around 370. Ashish, how would you go about ICICI Prudential?
Yeah, so I think the broader trend is a positive, and I think this is not a momentum stock. This is more of a long-term kind of delivery-based idea, but definitely into F&O. So there is some kind of but the trend is not very momentum is not very strong. I'll say trend is positive, but momentum is not strong. So if someone wants to have a positional view, then definitely this looks promising for an upside towards 420 odd zone. On downside, 350 is a strong base for the stock. So I think one should keep it as a positional basis, but definitely looks good for at least 8 to 10% kind of upside from current levels.
Okay, that's ICICI Prudential for you, doing pretty well in today's session after the numbers. The other one, which is reacted positively after the numbers which came in yesterday, is Ultratech. Pull up that chart. It was up 4.5% in yesterday's session. It's up another 5%. It's hit its 52-week high. The rollovers are looking strong, and the numbers were a beat in all parameters. The cost-saving measures, the consolidation that synergies actually which they've drawn by consolidating assets of JP and also including Banani is clearly showing in the numbers now. Aditya, if I could come to you, Grasim 2 holds 60% stake in Ultratech, and alongside the movement that we've seen in Ultratech, Grasim 2 is trading hard by almost 3% in trade. If I were to ask you to take a bet on one stock, which one would that be, Ultratech or Grasim?
Well, out of the two counters, I would like to buy Grasim. If we see Ultratech, then the stock has already seen a good movement in last two trading sessions. It is up by almost 12 to 13%. So from current levels, if you see this Ultratech, it is not giving a very good risk to reward ratio. But yes, if we see Grasim, then this stock is looking definitely positive. After good accumulation, now stock has given a breakout above 900 levels. So I'm expecting that this stock can test 965, 980 levels in next couple of trading weeks. So this is one stock in which one can go positional long with a stop loss of 870 on lower side, but on my higher side, my target will be 975 to 980.
Okay, and from there we move on and address Bharti Infratel, and what a confusing stock this must be, because it's seen the biggest revenue drop in nearly 6 years right now. The earnings are weak, they're below expectations, it's down 3%. Its underlying is at 292. That's as far as fundamentals go. I'm looking at the charts, and after making highs of around 330 back in March, it's come off and quite substantially. And in fact, the selling pressure has only increased in the last 3 or 4 odd sessions. So there's certainly some concerns there. It's also lost out on some crucial daily moving averages, and it's actually headed towards the 200 DMA on the downside. So certainly the charts also not looking very pretty if you consider just the last 2 or 3 odd weeks. Currently at 292, 293. Ashish, does this look as a reasonable shorting candidate?
See, Bharti Infratel, the trend is weak, and in fact, it has in today's trading session has given some strong dip with high OI build-up. So clearly, I think the trend is weak. But generally the stock is dull in nature. So if you are even shorting, it will take a lot of time to really make money out of the short positions. But yes, definitely till 298, 299 is not crossed. I think there's a possibility stock might try to test 278 to 280 zone in next couple of few trading sessions.
Okay, let me quickly just address few queries on YouTube. We've got a query coming in from Abhishek. Ashish, I'm going to come to you for this one. He shot on 11,700 put strike, 11,750 put strike, and the premium which he's got from there is 8 and 18 rupees respectively. Besides that, he's also written the 11,750 call after getting the premium of 24 rupees. He wants to know if he should continue a hold till the expiry today.
So I think, see, what he has created is a short, straddle where he has written both call and put. But I think, since it's trading above 11,750, I see a possibility of Nifty hitting 11,800, 820 kind of zone in a very short-term time frame. So it's better to, exit the short in the call option side. And as far as puts are concerned, he should continue holding on to this writing positions of put. You should keep 11,700 as stop loss. If 11,700 gets broken down, then that would be a time to exit your
so immediately he should cover the call position and continue holding the put position.
This puts which he has written.
Okay, let's also take up a query from Nyanesh Jejurkar. It's on Coal India May futures. He wants to know what can be done with this one. Let's pull up the futures too and see where they're currently trending. At 252, 253 odd when it comes to the spot. Not too much change in its May futures for now, up 1.3%, but its underlying is down 0.5%. Aditya, how would you help Dhyanesh out?
Well, if we see Coal India, then in last few days, stock has seen a good move. But on higher side, now if we see then 255, 258 is a resistance zone for the counter. And stock may consolidate now for next few trading sessions. But yes, overall view is positive. So he can continue with his with his long position with a trailing stop loss of 244. On higher side, if it breaks 258, then next target would come in the zone of 270, 275 levels. So I would recommend to hold with a trailing stop loss of 245 in Coal India with target of 270, 275.
Coal India is up nearly 6 to 7% at least in the April series. Ashish, do you want to revisit your call on Aurobindo Pharma? Any sort of revision in target prices?
So in fact, I had revised targets that time itself. Initially when I recommended it was 825, but then we had a call for 845. Now the reason why we like Aurobindo Pharma for a big up move is, if you look at this stock, it has been consolidating since September 2018 in a broad range between 830 on upside to 700 on downside. So if you look at this range, it is almost 120, 130 rupees range. And whenever this range gets broken on a higher side, you will see at least 100, 120 rupees kind of uptick from those levels. So I am expecting stock to hit 920, 930 positionally and eventually cross 4-digit mark, because that's the kind of structure we have. And I think one should ideally ride this trend with a trailing stop losses. Now according to me, the stop loss is around 790. Ride this trend, maybe initial target 840, 845, but if it sustains above 832, one can again revise targets from 840 to maybe 880, 890 zone.
Okay. Well, a very interesting stock out there that Ashish has pointed out, and he's expecting a minimum of 100 points up move from, considering it's moved out of that range. But we've run out of time on this show, so I'm going to take a moment to thank both our experts, Ashish and Aditya, for joining us and taking us through their views on the markets as well as solving some of our viewer queries. For more updates on the F&O space, you can also check our website out, bloombergquid.com, specifically the futures and options pages.
Well, don't forget to tune in tomorrow as we do the rollover analysis. Remember, the May series is going to be very interesting as we get the result of the general election. It may also call for a stomach-churning volatility. 23rd May is the time when you get the result. But we'll do a thorough analysis as to what positions have been rolled over, which are the stocks which are not looking good or looking good in the month of May series. So do tune in tomorrow for the F&O Show at 10 a.m. Thanks a lot for watching. Keep watching Bloomberg Quid for more news and updates.